Joining us now to tell us more on the current and future state of the small business economy in Canada is Mr. Jeff Brown, small and medium business leader at Equifax Canada. Mr. Brown, welcome to Forum Daily.
Thank you for having me.
Now, looking over your report, I came across the term financially active quite a bit. So let's start by clarifying what exactly is a financially active business.
Well, calling a business financially active is such an important indicator, especially during the days of the pandemic. And when we use the term financially active, it means not only has a business gone through the process of registering provincially or federally, it means it's actually purchased goods and services from a major supplier or a bank. Essentially, it's made a commitment of funds somewhere to another business and is actively contributing to the growth of the economy, regardless of its size. So if you're a small plumbing business, this would mean purchasing fittings and equipment from an original parts manufacturer. If you're a restaurant, it means purchasing goods, products from equipment and Canada's major food distributors across Canada.
All right, sir. And taking a look at the report overall, what would you say are the key takeaways from it?
So I think there's really three key points. So number one is that the federal small business support really gave small businesses a lifeline. So despite lockdowns ending and an easing of restrictions, the amount of new credit being requested by small businesses remained fairly low. We saw this through a 20% year-over-year increase or decrease in credit requested by small business suppliers, and only a 30% year-over-year increase to credit being established with the banks. So given that this is a comparison to last year's full lockdown period, it's strikingly low. So with the reduction of small business support programs back on October 23rd, it means an incoming resurgence for banks and suppliers, the amount of credit that's going to be requested. So fairly key point there. Number two would be small business delinquencies continue to hit record lows. So this means that credit from small businesses has been establishing during the pandemic has been meeting the expectations of lenders and suppliers. So Canada-wide, 30-plus day delinquencies were down about 4%. So this is from 12 to 8% since the pandemic really started. So that's a really key point. So small businesses are really doing well and have been supported very strongly by the federal government. So the last one is really kind of what we said on the onset, is that small businesses are really going through a revival. So we've seen tens of thousands of new small businesses emerge and become financially active within the economy. So while the numbers of new financially active businesses isn't quite as high as prior to the pandemic, it's leaps and bounds higher than it was this time last year. So Alberta is really leading the charge in new business growth with 72% increase. And Atlantic Canada is in around 62%. So really a strong play across the board here. So while it's been incredibly easy to focus on the negative stories that have happened during the pandemic, the volume of new small businesses transacting in the market right now is a sign of proper support being given by a combination of us as consumers and really the government. So it's really ignited the entrepreneur spirit within Canada right now, and they're ready to really seize the opportunity that lies ahead.
And this report mentioned that growth is being stoked by Alberta and Atlantic Canada specifically. So why those regions?
So both these markets were hit really hard at the beginning of the pandemic and saw the brunt of delinquencies and a reduced number of consumers really spending. So basically, they were the first to see the largest hit. And so it shouldn't really be a surprise to us that they're also the first markets that really want to be through this at the end of the day. So we've seen really key growth in the construction industry as well as the services industry. So as these lockdowns really eased, it was those same markets that really wanted to go in there. So we're being stoked by a really hot real estate market, and the services industry is really being taken over by businesses that really want to be in there. So there's a lot of businesses that were self-selecting, and a lot of new entrepreneurs really want to step in and fill that void.
All right, sir. So what do these numbers indicate for the future of Canada's economy heading into the new year?
So really, there's a lot of positive things that are really going on. So delinquencies being low, really what's going to be happening here is the federal government's going to be looking at the CEBA loans, the Canadian Emergency Business Account. So as those loans get paid off on this interest-free government-backed loans, as those get paid back, if it's being paid very well, we're going to see kind of a reopening of the economy even more so than we're seeing now. It's going to really help us get through some of the labor shortages that are happening and really be a positive note. So we'll see Canada's banks really being able to provide more loans out to small businesses because there's going to be more demand. And we'll see suppliers being able to transact more with them as well because there's going to be a freeing of capital that happens.
All right, some good news to keep our eyes out for, sir. Thank you again for joining us today on Forum Daily.
Thanks for having me.